To really get what stocks are all about, we have to start with one core idea. It's not about charts or tickers or what you see on the news. It's about ownership. A share of stock represents partial ownership in a corporation. This one sentence, this is everything. Seriously, if you can truly let that sink in, the entire stock market starts to make a whole lot more sense. Because a stock isn't a lottery ticket, it's a legal claim on a real operating business. So what does partial ownership really mean? Let's break this down from the ground up to see what you're actually getting when you buy that single share. Okay, let's reframe how we think about this. You're not just buying a number that wiggles around on a screen. You're buying a piece of everything the company has. Its factories, its brand, the cash sitting in its bank account. And maybe most importantly, you're buying a claim on the company's future earnings. You effectively become a silent partner in the entire business. That brings up a pretty logical question, right? Why would a successful company want to sell off little pieces of itself to thousands of strangers? Well, the answer is simple: to get the capital it needs to grow. Let's just trace this path for a second. A business wants to build a new factory or expand overseas. That requires a lot of money. To get it, they can sell off small pieces of ownership to the public. This big event is called an initial public offering, or IPO. It's the moment a private company goes public, allowing its shares to be freely bought and sold on the market. And this shows you the two-way street at the heart of the market. On one side, companies need capital to grow. On the other side, investors have capital they want to put to work to earn a return. The stock market is simply the platform that connects them. It's a two-way street of value. So now that you're an owner, you hold a pretty special position. The legendary investor Benjamin Graham pointed out that every shareholder actually has a double status. Understanding this is crucial, so let's break down what he meant. Let's really unpack this. Graham is saying that when you own a stock, you aren't just one thing. You are two things at once, and you get to choose which role to play at any given moment. That choice is the key to intelligent investing. So here's the crucial point. You wear two hats. Your first hat is that of a part owner. Wearing this hat, your success is tied to the long-term success of the actual business, its profits, its growth, its management. Your second hat is that of a holder of a marketable share. This gives you a fantastic advantage that a private business owner doesn't have: liquidity. You can, at any moment the market is open, sell your ownership stake to someone else at the going price. Understanding which hat to wear and when is everything. And this brings us to the single biggest mistake new investors make. They confuse the daily price of the stock with the underlying value of the business. They are not the same thing, and your double status is what allows you to exploit that difference. Graham drew a sharp line between these two mindsets. An investor, the person on the left, first analyzes the business to figure out what it's worth. Then they check the price to see if it's a bargain. A speculator, the person on the right, does the opposite. They look only at the price, trying to guess its next move, basing their idea of value on crowd emotion. The investor focuses on the business, the speculator on the price chart. Think about that for a second. If you owned a successful local restaurant, you wouldn't feel the need to have someone shouting a new price for it at you every second of the day. You'd care about the quality of the food and the number of customers. An investor approaches a stock the same way, by focusing on the health of the underlying business, not the noise of the market. So let's bring this all together. When we strip away all the complexity, what does owning a stock really mean? What is the core insight we need to hold on to? This right here is the takeaway. It's not just a nice thought, it's the legal reality. When you buy a share of a company, you are an owner. The CEO is your employee. The board of directors is accountable to you. You have a claim on everything that company owns and earns. Thinking like a business owner, not a gambler, is the fundamental shift. So I'll leave you with this question. The next time you look at a stock quote, what will you see? Will you see a meaningless number bouncing around on a screen? Or will you see your small piece of a real operating business enterprise? The answer to that question will define your entire experience as an investor.